In today's market analysis video, we'll talk about the elephant in the room, stagflation, and what to buy and sell in this type of environment if we're going to enter into a period where jobs data is weakening and inflation is not going away. We'll talk about gold and silver and whether or not they are setting up for some big breakouts ahead. And a critical question this week is, did the Fed make a mistake? And we'll talk all about the dollar, which I know is critical to a lot of traders' analysis, and whether or not stagflation is bullish or bearish for the dollar. And finally, we'll tap into what I believe is a potential trap in US stocks. As we get started, make sure to hit the thumbs up button, subscribe to the channel if you're new. We just crossed 500,000 subscribers. I thank you every day for joining me on this channel and hope I can help. Let's jump in. Stagflation is a rare economic condition marked by high inflation, stagnant economic growth, and high unemployment simultaneously. And I don't know about you, but rising prices and not having a job does not sound like a great time. And on Friday, Powell kind of confirmed that we do have some stagflation risk coming to the markets. He suggested rate cuts are coming, but not because Trump demanded them. In fact, an overly simplified view of what he said was essentially inflation is still on the rise, while jobs in the US are clearly showing signs of slowing down. Here's your job openings data here, showing a consistent decline over the last few years. And arguably the nail in the coffin is the non-farm payrolls here in the US, which have been really declining. And I've gotten this question recently. If we're gonna see some stagflation in the economy, what should we buy or what should we sell? Now, first of all, an important distinction to make is we don't have guarantees of anything ever in the economy. It's very hard to predict. Stagflation may happen, but it's not guaranteed to. I see elevated risks to stagflation, and so does Jerome Powell. That's why he hinted that rate cuts may be coming, because he sees now a risk to labor data and inflation data. So what do we want to buy or sell if we think there is going to be a stagflation type of environment? Well, let's talk about first some of the things that may be under pressure if we do actually see a prolonged period of stagflation in the economy. Again, a reminder, slowing jobs data and elevated prices. I'm going to talk more about stocks later, but one of the things I need to mention here is that remember that if the consumer is not employed as much and seeing higher prices, what does that do to their spending power? It does not help it, it hurts it. And so companies may actually experience some tougher days. Some of their earnings may come down, and what can that lead to? Layoffs, and layoffs can only extrapolate the problem further. And so that is to me, a risk to stocks that I'm really sort of not interested in taking. I'll talk more about stocks later, but stocks would be more on for me, the sell side if we think a prolonged period of stagflation ahead is likely to be the scenario, which again, to reiterate, we don't have guarantees of that. But right now, in my opinion, the data is suggesting that we could see some tough data ahead. And a confusing topic for some is the US dollar. Is it a buy or is it a sell if we see stagflation? Well, it kind of depends, and it is a little bit complicated. If you see something that's kind of isolated to the US, where the US is really feeling a slowdown in their economy, but it's not necessarily a global phenomenon, the US dollar is likely to move much lower, right? Because in that environment, they're cutting interest rates and the economy looks weak, and people outside of the US are like, ooh, maybe not invest in the US right now. But if it's a global phenomenon where everyone is kind of struggling and the economies of the world are kind of slowing down, the US is the global reserve currency, in which case the dollar could actually do well. Right now, I actually see more room from kind of a fall from grace for the US dollar, and my path of least resistance is still bearish on the dollar. I'll talk about some trading setups that I'm seeing in the dollar in just a second. But the most obvious buy, in my personal view, if you're going to see a stagflation type of environment continue, would be silver. So based on what we just got done, the EdgeFinder should have already computed all of this analysis for us, right? Yep, the EdgeFinder top setups page has already identified that economic data suggests bullishness for metals and that the technicals are starting to look good too. The utility of the EdgeFinder is it does macro fundamental analysis automatically. Essentially, it helps to automate traders who want to incorporate fundamental analysis into what they are doing without having a PhD in macroeconomics. So if you are somebody who doesn't worry too much about the technical side of trading, but want to incorporate fundamental and market sentiment trends into your analysis, consider checking out the EdgeFinder free free version. Last week, we launched officially a free version of the EdgeFinder. Now, full transparency, it is a limited version, but there are still some really great tools available for free on our website now, and you can get access using the link in the description down below. It should be the first one down there to explore the free version of the EdgeFinder and check out some of the tools that are available. Of course, if you later want to upgrade to the premium version and get access to all of our tools, that of course is an option to you as well. And when I look at the top setups page, I do like the idea generally of staying on the bullish side of metals. If we are going to see an environment where labor data is cooling, but inflation is sticky, metals kind of reign supreme. Again, I need to consistently reiterate that we do not have guarantees that stagflation is the new norm, but I think right now that the data suggests we could be entering into a period where you do have slowing growth and rising inflation. That seems to be what the Fed is worried about, and to me, that is why I'm very cautious about buying the hype of rate cuts that we saw on Friday, and instead I'm pivoting more towards looking at possible long setups on silver and gold. And I actually like the price action a lot better on silver. I marked up this chart here for a possible trade setup that I'm looking at on the silver price. If we were to get a pullback into like the 38.22 level, I may look for a long position on silver with the idea of a push back through those highs. I do think that if you are going to get a stagflation type fear event, then metals in general look really attractive. And so a pullback into a technical level of support looking left looks really attractive to me. On the daily chart, silver also is moving with some really nice momentum. But why am I looking at silver? Why not gold? Well, gold is still very choppy and indecisive in a range that has been consistent for the last few months. While I do think that the potential price action resolve to the upside could happen, I don't necessarily want to sit around and wait for the chop and would much rather stay trading silver where I think there's just much cleaner price action for the time being. However, in terms of gold, if we were to see a break through these previous highs, that would be to me a huge signal that gold is likely to continue to the upside. Again, my bias on gold and silver relies heavily on the automated setup that the EdgeFinder generated based on sentiment, technical, and economic data. When I take trades, I want to align as many things as I possibly can in my favor prior to taking those positions. Just because a pretty chart is taking place does not mean I will take a trade, right? Technicals can be a little bit misleading. I would rather use all avenues, fundamental analysis, market sentiment, and of course technicals as well for entries and exits. But direction for me comes from fundamentals. Before we move on from commodities, I know last week I was talking about a potential oil short, which still kind of looks attractive to me, but I do not currently have a setup on the EdgeFinder for that. So I'm going to keep an eye, and if oil does pop back on the bearish list, I may be looking for a possible short this week on oil prices as it reverts back to the 66-65 area. We also got some interesting setups on the currency side here this week. Euro dollar, pound dollar, and Kiwi dollar are all getting bullish readings within the EdgeFinder's top setups page. A lot of the economic data suggesting that the US dollar looks weak relative to some of its peers, specifically on some of the economic surprises that we've had recently. For example, cooling retail sales numbers, PMI data, and of course the jobs report. We also have bearish readings on dollar yen, dollar ZAR, and dollar Swiss franc. So dollar is definitely on the kind of bearish side of the EdgeFinder, at least for now. And we can kind of see why when we look at the US economic heat map, which summarizes a bunch of the data for us. You can see that the US dollar and US stock market are getting bearish readings here within the EdgeFinder simply because most of our indicators are suggesting some softness in the data. If you want to break this down line by line, you're more than welcome to. This column is for the dollar, this is for US stocks, and what we can see here is that where we're really losing some strength is in the growth metrics like PMI data, retail sales numbers, as I mentioned, and some of our softness and jobs report data like the jobless claims, which came in soft, the job openings, which came in soft, and the NFP report, which also came in soft. This to me suggests some softness in US dollar as well. And so when I look at something like euro dollar, I'm looking for pullback buys for continuations of these trends that we've been seeing in 2025. I also like the British pound against the US dollar. I like two setups here, either a pullback into the low end of this previous kind of candle's big shoot to the upside. If we come back and retest that, I could look for some possible longs there. Alternatively, if we do get a breakout and retest of this area around 1.3550, I may be looking for a long side continuation play on the pound dollar. So I do like the pound, I like the euro against the dollar, and I also like the Kiwi dollar, which I think in terms of relative strength here recently has been an underperformer to the others. Finding some support here, a little bit of dovishness from the RBNZ, but I do think that with the US potentially pivoting more dovish as well, we could see some upside here for the Kiwi dollar as well. And if I take these trades, I'll share them, of course, in our signals group. Inside of our VIP signals service, you can see all the trades that I am taking on the Forex side, stocks and options, commodities, indices, and much more. If you're also familiar with Marco from our live streams, he also shares his trades. He trades indices, commodities, and Forex. And we also have Chris Pulver in here where you can see a lot of his stocks and options, Forex, commodities, etc. trades. And of course, Ivan as well. And if you'd like some information about the VIP signals room, you can also find it on our website, a1trading.com, or speak directly to our support team. If you have any questions about how the signal service functions, click the link in the description down below to speak directly to our support team. I'd love to meet some of you guys inside of our Discord. We have people from all over the world in there and a really active chat room. So if that's something that you're interested in and you want to take your trading to the next level, consider getting access to our Discord VIP version as well. Taking a look at the DXY itself here, again, found support at least so far here today. I'm recording this, of course, Monday morning. By the time you see this, things could have moved a little bit. But in terms of where we're at, we're sitting at support around the 97, 87 level. I'd be curious to see if we do take that low out. To me, that could signal we may be kind of stair-stepping our way back down to the previous lows around 96.50. I think the path of least resistance for the dollar, like I said, is to the downside. I'd also be interested in a possible dollar short if we did see a reversion back to the previous structure high here prior to the Fed meeting on Friday. Cryptocurrency took a hit over the weekend. I actually thought this was really interesting. Bitcoin reversed all of its gains from the Friday announcement. You can see over Saturday, Sunday, and into Monday, we did get a complete sell-off of that crypto rally. Ethereum had a massive day on Friday, at one point up 15% or so, reversing a little bit of those gains. And I want to talk about a really important concept, which is, did the Fed make a mistake by signaling rate cuts? Back in September of last year, when the Fed cut by 50 basis points, the market kind of revolted against that decision. You can see that rate cuts came in right around here, and the 10-year government bond yield actually started to persistently and aggressively rise. What that signaled, right? If you're the Federal Reserve and you start cutting interest rates, the idea should be that the bond market starts to say, okay, yeah, they're going to keep cutting interest rates and things are going to look good, and the rate should come down, right? That was what we sort of all expected. But then instead, as soon as the Fed started cutting interest rates, the bond market said, oh no, we're going to get sticky inflation and the economy is going to hold up for a little bit longer. And so the bond market actually started to trade in reverse to what the Fed was doing. It was a very interesting and rare phenomenon. Usually, by the time the Fed is cutting interest rates, the bond market kind of agrees and approves of the decision. So this is what I mean by watching to see what the bond market thinks about the rate cut decision or the rate cut kind of outlook for the end of the year. And what's interesting is on Friday, we did get a push lower in tandem with the announcement from Jerome Powell. But today we are seeing rates backing up to the upside here to 4.287% on the 10-year. Watch this chart closely, because if we are concerned about inflation staying much stickier than expected, the bond market will likely sniff that out. And this could actually signal that even though the Fed wants to cut rates, the bond market may disagree with that idea and start demanding more yield for the bonds that people want to buy, right? So remember, the bond market is an auction house. And if people think the US is going to go crazy with inflation, then bond market investors may demand higher yield in exchange for their money, right? Remember, it's an auction. People are buying bonds from the US. If they want to buy bonds, but they think inflation is going to stay sticky, they may only buy those bonds if the yield, right, the return that investor is going to get by buying the US bond is worth it to them. So if people feel like, hey, yeah, inflation should come down, or generally speaking, over the longer run, which is what the Fed keeps saying it's going to do, the bond market can call that bluff. And we'll see if that does take place. That was a very interesting phenomenon that happened back in September. We'll see if it repeats itself again here in 2025, or if the bond market will kind of play ball and we will see this thing move lower in tandem with the Fed's signaling of wanting to cut rates. If you want more information on this topic about how to read this 10-year yield chart, one of the most important charts in markets, I've done a video on that will leave in the top right hand of the screen right now. And if you're a trader outside of the US, listen up for a second. Vantage Markets is today's video sponsor, and they are a brokerage that offers CFDs on pretty much everything you could possibly want to trade. If you want to trade Forex, if you want to trade crypto, if you want to trade indices, gold and silver, they have a CFD platform that has very low trading fees, and they're offering a very generous welcome bonus to new clients at this time. For my subscribers, if you use the link in the description down below, you can get access to Vantage and take advantage of their welcome bonus that they're currently doing. They also offer a copy trading platform, which is pretty advanced, and a ton of educational resources to their traders. You can also trade directly on TradingView.com with Vantage, and they offer MetaTrader as well. So if you're looking for a better brokerage, consider checking out Vantage down below in the description or pinned comment below. Dollar yen is getting a very that was a huge move lower on Friday. Bouncing, however, though, and just kind of goes to show the nature recently of the currency market. It's been very choppy, just like most markets have. Low volatility market right now. In fact, let's just look at the VIX in reference to this. You do get a little bit of a poke back higher on the VIX here today, back up to 15, but still very low VIX. We'll see what happens here. This being so low is why a lot of charts are just not moving very much, right? Other than the big Friday pushes, the VIX is suggesting that there's just not going to be a lot of movement for a little while. A little bit of a pop, and sometimes the VIX is wrong, right? But a lot of times the VIX is right. So volatility expectations right now in markets are very low. That's what we can read from this. So the put to call ratio on the S&P 500 is sort of in neutral territory. On Friday, okay, so on Friday had a little bit of mixed sentiment. You've had some put buying and some call buying kind of mixed in the middle. If you're new to the put to call ratio, it's one of my favorite sentiment indicators. All it does is it tracks volume on the options exchange. Are people buying calls or are people buying puts? And when people are obviously buying a lot of puts, this chart goes higher. And when that goes higher, that suggests that the market sentiment is really, really bearish. And when this goes very low, that suggests the market is greedy or there's a lot of calls being bought on the options market, right? So we can also, by the way, we can repeat this study for a lot of stuff. We got gold, we got NASDAQ, Nikkei, Russell, silver. You can pull up all these things if you have a copy of the EdgeFinder and explore it. And it is, like I said, it's a feature on the EdgeFinder free demo version that you can explore too. So if you didn't already grab it, I mentioned it earlier, EdgeFinder free demo version can be accessed using the trial link. We'll drop that again in the chat here for you to take advantage of that. Get a copy of the free demo version and play around with it to see if it's right for you. Okay, so put to call ratio. Let's look at just a couple other indices here. Russell, we did get a lot of calls last week, a lot of bullishness, which makes sense. Russell was up a ton. NASDAQ still a little closer to the high call side of things. So a lot of people buying calls in the NAS. No surprise there. Dow Jones was kind of in hated territory, right? But now has kind of drifted back into neutral camp. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.